Good morning. I'm Joe Brusuelas, Senior Economist at Bloomberg LP, with your Bloomberg Economic Brief Morning Cup of Joe. Okay, so things have quieted down a little bit here in markets. There is some lingering concern, especially over the ECB's decision to temporarily suspend lending to 4 banks in Greece until they're properly recapitalized. While those banks do have access to liquidity via the Greek Central Bank, it's certainly an interesting policy decision by the ECB during a time which a not so stealth bank run is going on Greek banks. Now, here in the United States, we don't seem to be responding too negatively to the overnight news. Futures look to have a mildly positive open, but we'll see once we get going, mostly because we've got some data before the opening of the market here in New York. Specifically, it's the initial jobless claims for the week ending May 12th. Now, it's going to provide something of a barometer for us in the labor market. Investors will be looking for confirmation that the increase in claims that we noted in April was due to seasonal factors, and we see a reassertion of the trend that we saw in March, which would keep claims near the current level of 365,000. Now, claims at that level is consistent with monthly job gains somewhere between 125 and 150, probably near the bottom of that range. Nevertheless, that is sufficient to meet demographic demand in the United States in terms of people entering the labor market. We want to see job production much higher. We want to see that above 200,000, but that may be a little ways off. I think 150 to 175,000 is really in the cards on average for the remainder of the year. Now, those jobless claims numbers are key. We're going to see the Bloomberg Consumer Comfort Index at 945 this morning. You know, over the last several weeks, we've seen a partial reversal of the improvement in overall sentiment since the beginning of the year. And I urge you, for those of you who have Bloomberg terminals, to go to function COMF, where you can take a look at the deep demographic data behind this survey, and you can really see how the lagged impact of rising food and fuel prices and the increase in the pace of firing and higher jobless claims during the late winter and early into spring has really sort of taken the steam out of the improvement in consumer sentiment. So we'll want to watch what happens in that survey today. Then, of course, at 10 o'clock, we're going to get the Philadelphia Fed for May. I think it's going to reaffirm what we already know about the manufacturing sector. The pace of manufacturing remains stout. Manufacturing continues to be the primary driver of the nascent economic expansion, and there'll be nothing we're going to see in that report that's going to change that today. Look at the new orders, not the headline. That's a good forward look at what's going to go on in that region. I'm Joe Brusuelas.